Well guys, Tesla has done it again. A 10-day win streak and over 40% of gains since we saw it break out of that channel has everybody, I'm sure, quite excited. But it's gone through a point that's even more important, the $250 bracket. What does the data suggest, though, happens next? Well, today we'll break down when this has occurred in the past, and you may be surprised by the results. Also, zombie companies, something that we know about and we don't really want to be seeing is happening right now. Bankruptcies returning back to the heights we saw before the global financial crisis and, of course, during the 2020 crash. Could that derail the melt up that we've got on the S&P 500? Meanwhile, crypto starts to find a little bit of base and, of course, opportunities are everywhere in the markets. It's been a great week of breakouts and we'll be breaking down whether there's more to come in several stocks, commodities, and cryptos in today's video. Join us. It's going to be a good one. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we'll be breaking down everything from the macro to the data to the key levels that we need to be watching. It was a great day for Tesla, breaking through 250 on options moves. And of course, NVDA made it back to the resistance. But it was also not bad for some of the banks, jumping up into the anticipation of the earnings season kickoff. And yes, we're back into earnings season, which means amazing trades are going to be just around the corner. So if it's your first time here, remember to subscribe and smash that bell icon. We'll be covering everything you need to know. So let's just quickly start off with Tesla. And I did post over on X that usually around 9 to 10 days, you start to see weakness in a position. Usually when you look at Apple, Amazon, any of those stocks that have done in the past, they tend to find a little bit of resistance, weakness around key levels. But that may not be quite so when it comes to 9 consecutive days up on Tesla and the absolute returns over the 21-day period afterwards. In fact, Optima over here on X have actually posted this and said, could I share it? Absolutely, I can. And basically, this shows that there is an average 18.6% gain on Tesla after we see these types of runs. Now, does that mean that we end up going up in an absolute parabolic circle? No, we can get, of course, pullbacks during this time, a little miniature pullbacks, as you've seen here in some of the results we've had in the past. But it's a very interesting gain, an average of 18.6%. Can that overcome the recall rumors that we've heard over the last kind of 10 hours? Yeah, it'll be interesting to see how it opens and trades over the next couple of sessions. But with the breakout, we'll break it down with the options later on. Let's talk weekly flows. Of course, it's always interesting to see what Wall Street and the biggest players are doing. And they've been jumping into tech, which is probably no surprise recently, and also jumping into consumer discretionary. Now, we first saw consumer discretionary about a month ago, and we started to see a turnaround in that. And that led us into things like shop and a few other positions. And again, this is all about the rotation in markets. But it's very interesting here to see that we haven't really seen an uptick massively in materials. We're not really seeing a huge amount of defensive movements or anything like that. So it really is a concentrated market into growth stocks at this stage. But as I've talked to you guys about before, I think that metals are starting to come through. And if the inflation numbers go to maybe a little bit more re-inflationary, and that is inflation hasn't been killed just yet, yeah, you better believe metals are going to go absolutely bonkers. And also oil, which is at an absolute critical level we'll look at later on today. So we discussed the idea of US bankruptcy filings. Mike Zaccardi over on X here has this particular chart, and you'll notice that in the recent months, we've started to see a big uptick in bankruptcies due to higher interest rates, you would have to think. And we're now sitting at a point higher than during the 2020 crash. Like everything though, you need to look at these figures and break it down and really understand whether you need to be terrified of it. Where's it happening? Well, a lot of consumer discretionary stocks went bust. That's usually pretty normal. Healthcare stocks are going bust. A lot of those don't make any money, at least initially, so it makes sense. And of course, you're not really seeing too much bankruptcies in some of the old businesses out there: energy, utilities, financials, and materials. Now let's have a look though and put it back into perspective of the last kind of 15 years. Is this incredibly terrifying? Well, bankruptcies tend to actually happen usually during recessionary periods or just after them. This is a bit unusual because, of course, it's happening during a non-recessionary period, and in many ways, it's actually engineered by the Federal Reserve. Now, what do I mean by that? Well, in many ways, they need to kill what we call zombie businesses. And why is this? Well, they are a massive drain on the central bank's funds and the central bank's ability to actually navigate the US economy. So this was always going to happen. We've heard about it for years. The main thing here is really going to be, where are these bankruptcies? And in particular, can they be held by the current financial system as things still look like they're growing? And this is because if you ever look at something like the US 2K, which is the Russell 2000, somewhere between 33 and 37% of those businesses don't make any money. That is, they never turn a profit, they never do very well. So that's not, again, historically the highest we've ever seen, but this is something that needed to happen. And this is also coupled with what we call commercial properties also having problems out there. It's not something I'm super worried about just yet, but I do see it floating around on the markets, and everyone is talking about it and saying, oh, look, it's clearly another recession is coming. This is in plain sight, and it has been for some time. Remember, if something's in plain sight, it's very unlikely to be the catalyst to the next big crash. Generally speaking, if everyone's talking about it anyway, that means it's not going to be one. Now let's have a look at the 2024 EPS, because of course we are tracking a non-recessionary year at the moment, and we're going into another earnings season. Now, generally speaking, it's expected that 2025 will be pretty good. Wall Street's in fact pricing in that the S&P 500 will have somewhere between 15 and 17% returns over the next year, and that's pretty epic. And that's actually what they're looking for. And this is leading into some very interesting discussion points. So let's just take a step back here and have a look at Goldman Sachs CTA estimates, because we know that CTAs have been kind of neutral to buying. They've got a new report coming out this week from Menthol Q here, and you can see that basically they have like a couple of trajectories that either stick right where we are in the market with a slight ground up, or in their medium and short term, they've got some pretty decent pullbacks. A 53.87 in the medium term. Actually, I think it's actually a 51.47 in the medium term. So that's all the way down. And they're expecting CTAs to reduce the tape. That is, that they're actually going to start selling at these highs. Now, could that be caused by inflation? Well, of course, the inflation trackers at the moment are showing that inflation should be coming under control. But I still wouldn't be surprised at all to see a little bit of reinflation coming through. That being said, though, things like clearly used car sales and things that are included in the inflation figures have been absolutely pummeling and getting smashed. They're down like almost 10%, I think, in just recent times. Let's have a look at the EPS growth. Where is it expected to be? Well, of course, the Magnificent Seven has made up almost all the growth now for the last 5 quarters. You can see here, it's Mag 7 stocks that are expected still to carry this particular quarter. But for the first time in a long time, it's expected that some of the other S&P 500 stocks have to start carrying their weight. And this is going to become more and more important over the next 1 year. So effectively, it is now expected that it's not just the Mag 7 stocks this earnings season. We need to see some other stocks having good earnings as well to show a bit more of a broader economy recovery. And of course, I think this is something that Wall Street will be very much looking for, could create some volatility for us. Now, we discussed the idea that puts are a little bit low. In fact, puts are all the way down at 0.58 in terms of put-call ratio, showing that calls are everywhere. We know that big seasonality is coming up. We know that that means that there could be some volatility arising somewhere August, September, October this year, leading into the elections. They're always a volatile time. And we know that people are going ballistic on calls. And of course, this is leading into things like Tesla and also some of the other semiconductors such as AMD and Intel finding some really nice trades. And that's, of course, because people are piling in on calls, FOMOing, and trying to catch, some nice percentage gains. As always, it's best to be a pig in these situations, be early, understand the price action, and I'd like to think we've done that on all 3 of those pairs recently. S&P 500 days without a 1% decline. Of course, we're in that territory where you start paying attention to it. That doesn't mean you go and sell the market and you're terrified or anything. It just means that you're statistically entering into more outliers, and they can last for a while or they can stop pretty quickly. June, July, August, as we know, decently positive times usually for markets. Generally speaking, September, October is where the negativity is in election years. However, this will be all about earnings season. So the 2 weeks are almost over now, if you can believe it, of the most strong time, which is the first half of July. Then things start to get a little bit more shaky. It's reliant on earnings season. I expect the banks to do okay, at least initially. It's really going to come down to the technology stocks more than anything else. But do remember, put in your calendar, it starts here with airplane companies that I expect to have done quite well, and the banks on Friday. Be warned, these are going to have bigger moves than normal. I mean, Wells Fargo is expected to be 6 to 7% moves according to the options market. So as we mentioned, the first 2 weeks of July tend to be positive. We saw that switch last week. As soon as the Monday close happened, you had to go bullish, and that bullish level is pushing now into the 5600s. But will a dip be actually an opportunity for us all? Well, we know that zombie companies, of course, and therefore bankruptcies are on the rise. We know that we're starting to get into, bubble territory, if not already heavily in bubble territory in some of these semiconductor stocks, and we're starting to run into what we call a late cycle. Unfortunately, or fortunately for many of us, late cycle investing tends to give you amazing gains. But at the same time, there are risks if you get caught in it. So it's very important that we understand that we're probably 1 to 2 years away from some kind of horror show in these markets. And we need to remember that when we're considering what we're doing with our money. Leverage is something that a lot of people will be taking over the next couple of years. Hey, for me, I would say delevering yourself could be a good thing while still remaining, optimistic about the markets as much as you can. Now, why would you remain optimistic? Well, frankly, it's because Wall Street continue to remain optimistic. And as long as they're remaining optimistic, they pile their clients' funds into the market and they continue to push it higher. So do remember, this is all about earnings. Each and every earnings season is important and rotation will be key. And one of our favorite sectors in recent times has been gold. Of course, we like gold. We like consumer discretionary stocks recently. Semiconductors are always the best because, of course, we're in that AI bubble and we're seeing those real stocks hold up. Now, surprisingly, energy really took a battering. And of course, this week in inflation figures, I'm looking for a switch up in that. If that does occur, it's going to be a really awesome trade. So we'll be watching for energy stocks in particular around that point. Last 24 hours, great to see KRE up. That's excellent for the bulls. Financials also doing well. As you can see, there's a rotation into optimism for this Friday's result. And then we move into just more of the kind of normal same. So it was kind of like a flat day, couple of outliers, nothing much going on. When we move over everything to the S&P 500, you can see that we started to put in some overbought indicators on the weekly last week. We know that this usually means around 1 to 2 weeks away from a little pullback, at least based on historical stats. We pushed almost to 5,600. We started to find a little bit of selling by the end of the day. And you could argue that maybe the bears took control near the end of the session, although it's so minuscule, who would really care? A series of higher highs and higher lows are really what we're watching here. And you can see that that is exactly how this market's trading. So bulls still in firm control, little bit of bearish action near the close, and 5,600 still the target that most people have on their markers. Now, this is really just because of options. And of course, if we have a look here at the options world, you can see how stacked 5585, 5600 are. Positive gamma situation. If we push through 5600, we're past the lunchtime part of the session. There's probably going to be a lot of gamma, positive gamma in the environment, and therefore there's going to need to be a lot of dealer hedging. That hedging could push us higher in a squeeze. So really, we're stuck between 5550 at the moment in terms of options and the 5600 level. And we're waiting, I would say, for the CPI number. And the CPI number is most likely going to take us to a very, very key zone. We'll go through that in our next video just before, of course, the CPI numbers come out. NASDAQ CTAs, they've been purchasing. S&P 500 CTAs, they've been slightly purchasing. As we saw with Goldman Sachs, they've got kind of like an alert out there, kind of saying that they think there's going to be net selling coming up. Take that with a grain of salt. Ultimately, we must see price action come with it, but that will be interesting if we do see price action come with it, because those momentum style funds that CTAs are, if they start dumping, then of course it can create a little bit of a cascade effect. Copper, well, we're still seeing that pretty strong from the CTAs. Same with gold. And Brent has been the surprising one. A big uptick followed by a huge sell-off. Now, we are at incredible support right now. So this is exactly where we thought Brent would get down to in US oil. And at this point, we're going to look at that very, very soon. Let's now move over to the options streams. And you can see here, NVIDIA 132, right on that super positive gamma situation switch. If NVIDIA is able to hold this and go past 132 and close, it could create another flurry into the stock. I do tend to believe this could be a key resistance for it. And I'll explain why by using a bit of term structure. And if you like this type of stuff, let me know in the comments down below. So basically, we know that NVIDIA is having a chill. Why? Because the options market kind of shows here that it's just flowing around the normal kind of structuring zones and then exploding in terms of volatility expectations around earnings season for the stock. So it could be a bit of a lackluster time just based alone, not only just the semiconductors also find seasonal weakness around this period, but also because of the term structure being kind of like flatlining for now. It's not expected to be explosive until realistically that nearer to earnings season, but you can see it's going to be a very volatile event. So yeah, we'll watch. 132 currently a resistance on the markets. What about Tesla? Well, this is a huge deal. A lot of options movement over the last 24 hours, pushing through 250 like butter. I would have not expected 257 to drop so quickly, but sometimes that happens. And this is why we leave runners on the position. You know, we've been talking about it. I think there's nothing wrong with taking 175, 176 all the way to 250 and saying that was a great profit. I think historically that is a very good run. But as we saw with some of the Optima results, if you're still holding runners, wow, geez, I mean, next 21 days, how interesting is that for Tesla? I wouldn't be surprised at all to see the stock go down over the next 24 hours only because maybe these results, or I don't know what's going on with the recall, but obviously that could cause a problem. And in general, you'll notice that this whole thing is positive gamma striking towards 300. And you can see there are absolutely ballistic amounts coming in over the next coming weeks for 300 and the 250 and 260. As long as the stock can hold above those levels, it's going to mean that dealers will have to hedge. And you know what that creates? That creates pretty much a gamma squeeze. Let's move over to the S&P 500, the initial analysis here, and then we'll go to the rest. You can see that the central banks, they've been upticking a little bit. Nothing much to go on there. Put call ratio, equities plus indices, not quite on the lows again here. You can see a little bit of a bounce, but we'll be watching this one very closely because effectively, if these put call ratios keep going under 0.77, it's an early warning sign that the market's starting to top off. So we'll be watching that closely. Home construction, still weak, nothing to report back there. US dollar doing nothing. We must wait for the CPI numbers there. Copper pulling back as we suspected. Daily 20 moving average, a very important point, and around here. So anything in this range here, we're looking for bullish structure. And I expect that to be in our next video, and we'll of course analyze it when we start to see those things. Gold holding up nicely through that first bull level we spoke about in the last 24 hours. And we're looking for a break of 23.80 to bring us a new high. And a few people asked me, where do you think it's going to after that? Well, I think it'll be a new all-time high, but first up around 24.25. Okay, that would be my first target if I was a trader. GDX, what is going on with gold stocks? Still looking really good. Close above being bullish last week, of course. And we still think that these are playing catch up. First target, about 41 for GDX. Now, US oil, really cool level. Watch reaction here. This is where we thought yesterday in the last video we were going to discuss oil coming back down to. And it has, and it's finding a little bit of initial buy pressure, and of course it's weakening off here. Now I'm looking for this to take 82.50 a barrel at this stage and break this 2-hour 20 moving average down to find the bulls. I am waiting for bulls to show us in this green box zone that they want to commit back to oil. And I have a feeling this is going to be a post-CPI trade. We thought about that in the last 24 hours, and yeah, I love this level. I think it's pretty cool. It's definitely a good zone, but I must see a reaction. You do not want to be buying into, unless you have a longer term plan, and into multiple days of closure red. That's basically like buying, a freight train running at you and you're standing in front of it and you're saying, well, I can stop it with my powers. And of course you can't, it hits you and you're over. So basically you do not want to be doing that, and we need to see some form of buy pressure. This is the area though that we always target. And that's what we do here. We have patience, we react to the market finding some kind of buy pressure here, and we know that it's a key level where we expect Wall Street to be positioning. Let's move over to the major stocks now. Tesla to start off with, pretty amazing here, guys. 250. I had a heavy trade zone about 254. It smashed it. It actually came up and got a really interesting 262 move, which could be that it's now looking for 274 or even 300 on the targets. And the data suggests that actually is possible. While I think we'll give up a day and we'll go from 9-day win streak, down at some point, maybe even the next 24 hours, the data suggests there's more to come. So yeah, when people get hyper on Tesla, there you go. Over the last couple of years, people get really hyper, and we could be looking at another, 18% or something. So 9 days, 14%, possibly even up from here. Suggests that there is quite a lot of strength going on here. It did breach through. I would like to see some consolidation for a few sessions, then breach up. I think that would be an excellent retrade, and we will be watching it together very closely. But congratulations to people that left runners on, and also congratulations to people even taking profit at those key levels, because there's nothing wrong with taking great profits at great zones very quickly. AMD still looks good on the charts. Obviously, long leg doji. We got the breakout earlier, last week, and we've been continuing following that. And AMD looks like it still wants to set for 182.50. Intel first take profit actually hit. I've marked that here at $35 flat. That's what I thought was a good first take profit. Can Intel actually continue its trend though? Because if it can, there's a possibility of $40 for Intel. So it still has, this is one that you might leave a runner, break even, you trade, those types of things, and let it keep going. Now, when we go over to semiconductors in general, you'll notice a lot of them hit the 61.8. Semis versus SPY hit where I expect a resistance. NVDA hit where I expect a resistance. Will they find it though? This is around the area that you would generally see weakness. You are probably not going to trade that weakness, but I'm just showing you guys how I would generally break this down. I wouldn't trade it because, I'm bullish. This NVIDIA is one of the 3 pillars of my stock concept, which is obviously Microsoft, NVIDIA, and Google. And I still think this stock has new all-time highs to come as an investor. But as a trader, this is the kind of area I would expect resistance to come in at. Let's now go over to the Chinese market. Tencent still finding decent movement, but not above 392. Obviously, we need Tencent to go our way. Otherwise, HSI cannot go. And this still has no swing turn. So we're still watching HSI. I'm still very keen on the Chinese markets. Just needs to be at the key levels. And we are there, but we haven't seen the buy yet. We haven't seen the reaction yet. US 2K, it's boring. That is that's chop. We do not want to be part of that. QQQ, as you guys know, it's at an all, high. I wouldn't really do too much analysis on that one. Basically, the S&P 500 analysis helps us with those key levels. Let's move over to Ethereum here and look at the crypto world. Still at resistance. This is my major supply. I'm looking for a breakout past 3160. That will then probably force in the double bottom, push us towards 3,500 on Ethereum. So still holding, but at resistance. And the same for Bitcoin. You'll notice at the time of this recording, we're starting to put in place, can we move higher? But I really feel like the first bull turn doesn't start for a few more dollars yet, because I'm concerned about this being our supply level. You'll notice it's already tapped it. It has shown some signs of strength, finding a little bit of higher highs and higher lows in recent times. But still, this is where the bears, if they're going to sit, will pressure it back down. And I would prefer getting a most traded level at 51.8, but we'll find out whether we can actually get that. Of course, big swing zone, 64K, guys. That will be huge. What do we got coming up? Well, we know we have CPI on Thursday at 8:30 a.m. We also have PPI on Friday, along with the big earnings season kickoff in the banks. And make sure to be paying attention to those. Jerome Powell didn't really say anything groundbreaking, so I didn't bother covering it. But as always, if you enjoyed today's video, please remember to subscribe. Thanks so much for watching, guys, and we'll see you in the next one. Bye for now.